You just landed in Canada. Your home country credit score? It means nothing here. You start from zero, and that matters more than most new PRs realize, because your Canadian credit score controls whether you can rent an apartment, get a phone plan, qualify for a car loan, and eventually get approved for a mortgage. In the next 8 minutes, I'm going to walk you through exactly how to build a strong Canadian credit score from scratch, starting on the day you arrive. Let's go. Let me be very direct about why this matters immediately. In Canada, your credit score is not just for borrowing money. It controls your entire financial life. Landlords run credit checks before they hand you keys. Phone carriers check it before approving a postpaid plan. Car dealerships check it before financing a vehicle. Banks check it before issuing a credit card. And mortgage lenders use it to decide whether you qualify, and at what interest rate. A recent TD survey found that more than 80% of newcomers face challenges applying for credit in Canada. Not because they're bad with money, but because they have no Canadian credit history at all. Your score from your home country does not transfer. You arrive at zero. But here's the good news. You can build a solid score in 6 to 12 months with the right moves. The Canadian credit score runs from 300 to 900. Scores above 660 are considered good. You'll qualify for most financial products. Above 720 is very good, and above 800 is excellent, giving you access to the lowest rates and fastest approvals. 2 credit bureaus track your score in Canada, Equifax and TransUnion. Your score is calculated from 5 factors. Payment history is the biggest, 35% of your score. This is simply whether you pay your bills on time, every time. Credit utilization is next at 30%. This is how much of your available credit you're actually using. Aim to keep it under 30% at all times. Length of credit history is 15%, new credit inquiries are 10%, and your credit mix, having different types of credit, is the final 10%. As a new PR, you start with no history. Every factor starts at zero. The system I'm about to give you builds all 5 simultaneously. Step 1. Open a newcomer bank account on your first or second day in Canada. Every major Canadian bank has a newcomer program with fee waivers and credit building perks specifically for new permanent residents. The 3 strongest in 2026 are Scotiabank StartRight program, which RateHub named the best banking offer for newcomers and includes up to $2,300 in first-year value plus unlimited international money transfers at no fee. RBC's Newcomer Advantage, which offers a credit card with up to a $15,000 limit and no Canadian credit history required, the biggest credit limit available to a new PR in year 1. And CIBC's Simply Financial, which has a no-fee checking account with no minimum balance and a $350 welcome bonus. The smart strategy: use a Big 5 bank in your first year to take advantage of the newcomer perks and build your credit history. In year 2, before the fee waiver expires, transition your everyday banking to a no-fee online bank and avoid paying $15 to $30 a month forever. Step 2, and this is the most important step in this entire video: get a credit card on day 1. I know that sounds counterintuitive. You've just arrived. The last thing you want is more financial obligations. But here's the reality: your credit card is not for spending money you don't have. It is a credit building tool. Use it to pay for groceries. Use it for your phone bill. Use it for gas. Charge small amounts every month, and pay the full balance in full on the due date every single month. Never carry a balance. Never miss a payment. One late payment stays on your credit report for up to 6 years. The big banks, RBC and Scotiabank, offer newcomer credit cards with no Canadian credit history required and limits up to $15,000. If you don't qualify for those, get a secured card by depositing $300 to $1,000, which becomes your credit limit. After 6 to 12 months of responsible use, the bank will upgrade you automatically. Step 3. Master the utilization rule. This is the one that trips up almost every new PR even when they're doing everything else right. Credit utilization is how much of your available credit limit you're using at any point, and it accounts for 30% of your score. The golden rule is to keep utilization under 30% at all times. So if your credit limit is $3,000, keep your reported balance under $900. But here's the part almost nobody tells you. The utilization that gets reported to the credit bureau is the balance on your statement date, not your payment date. So even if you pay in full every month, if your statement closes when your balance is high, that high utilization gets reported. The fix is simple. Pay your credit card down to below 30% of your limit before your statement closing date each month. Do that consistently and your score improves faster than almost any other single action. Step 4. Be very deliberate about credit applications. Every time you apply for a credit card, loan, or line of credit, the lender runs what's called a hard inquiry on your credit file. Each hard inquiry drops your score by a small amount, typically 5 to 10 points. That doesn't sound like much, but when you're starting from zero and building up, multiple inquiries in a short period sends a red flag to lenders that you're desperately seeking credit. The mistake I see new PRs make is applying to 3 or 4 banks at once to see who approves them. Don't do this. Apply for one card through your newcomer bank program, RBC or Scotiabank, which are designed to approve new PRs with no Canadian credit history. Use that card responsibly for 6 months. Then, if you want a second card, apply at that point. Space your applications and protect your early score. Step 5. Make every payment count. Your credit card payment is the most powerful tool you have. Pay it in full, on time, every month without exception. One missed payment can drop your score significantly and stays on your file for up to 6 years. Beyond your credit card, any loan repayments also get reported. Now, here's a move most new PRs don't know about. Your rent payment, which is likely your biggest monthly expense, does not automatically get reported to the credit bureaus. But you can change that using a rent reporting service like FrontLobby or Chexy. These services report your on-time rent payments directly to Equifax, which builds your credit history faster at no cost to your credit score. Using all these tools together, on-time credit card payments, low utilization, and rent reporting, most new PRs can reach a score of 650 or higher within 6 to 12 months. Getting to 720 typically takes 12 to 24 months of consistent behavior. Here's a move that will save you hundreds of dollars a year and that most newcomers completely miss. In your first year, you should absolutely use a Big 5 newcomer program. Take the fee waiver, take the credit card, take the welcome bonus. But before that free year expires, transition your everyday checking to a no-fee online bank. The best options in 2026 are EQ Bank, which offers no monthly fees and a high-interest savings rate above 3%, Simply Financial, which is CIBC's no-fee online brand with unlimited transactions and no minimum balance, and Tangerine, which is Scotiabank's online arm offering a no-fee account and a cashback credit card. Keep your Big 5 credit card, closing it would shorten your credit history, which hurts your score. Just move your everyday banking. After the fee waiver, the Big 5 banks charge $15 to $30 a month for the same services you can get for free. Don't pay it. You need to monitor your credit score every single month, and you can do it completely for free. 2 apps are the best options in Canada. Borrowell, which shows your Equifax score weekly for free, and Credit Karma, which shows your TransUnion score. Many Big 5 bank apps now also show your score inside the app. Checking your own score is called a soft inquiry. It has zero impact on your score. It is completely safe to check as often as you want. I recommend checking monthly for 2 reasons. First, to track your progress as you build. Second, to catch errors. Credit report errors are more common than most Canadians realize, and an error like a payment incorrectly marked as missed can drop your score significantly. If you spot an error, dispute it directly with Equifax or TransUnion. It is a free process and errors can be corrected within 30 days. Here is your action plan starting today. Step 1. Open a Scotiabank StartRight or RBC Newcomer Advantage account. Take the free year and the credit card. Step 2. Get a credit card immediately and charge only small, regular expenses to it. Step 3. Pay the full balance on time every single month without exception. Step 4. Keep your utilization under 30%. Pay down before your statement closes. Step 5. In year 2, move your daily banking to EQ Bank or simply to stop paying fees. Follow these 5 steps and you will have a credit score above 650 within 6 to 12 months. Above 720 within 1 to 2 years. That score is what unlocks apartments, car loans, better credit cards, and eventually, a mortgage to buy your home in Canada. If this gave you a clear plan for building your credit score in Canada, hit like and subscribe to PR Wealth Lab. Every week we break down the Canadian financial system specifically for new PRs. Comment below. What's your current credit score situation? Did you arrive with a newcomer card already?